Hey everybody, Chuck Barone here. Monday, October 17th, 2022, and down the merry road to the bizarro world we're living in we go today. Picking up right where we left off last week with no rhyme or reason in these markets at all. It's insanity. As always, we just want to start by thanking everybody for their support. We love you guys. We appreciate what you do every day. Watching the videos, sharing them with your friends, your likes, your questions and comments. You guys rule, and you're the reason we work hard and try to do what we do every day. In the markets today, well, another crazy day, lo and behold. The stock market, so it just continues its gyrations all over the place. We had a big rally Thursday, a big correction back on Friday. Here we are on Monday with another gigantic rally in stocks. Stocks up across the board. That's the NASDAQ up over 3%. S&P up over 2.5%. This is a very broad-based rally. The entire market participating. Hey, good for everybody's 401k. It has the makings to me of a bear market rally. So take that for what it's worth. But if you're in a position where you might need to be changing some stuff in your portfolio around, or have a stock where you're in a little bit of a negative position, these rallies are what you need maybe to get you out, or at least get some of your money out and get closer to being prepared. Because I think these declines in the stock market are just starting up, guys. The bond market today had an up day, but down at the same time. It was just, these markets can't decide where they want to go. So the bond market rallies, starts out crappy, rallies, finishes crappy. 10-year was down as low as 3.94%, closing at 401. So back up over 4% on the 10-year. The 2-year sitting at 4.45%, just under the 4.5 number. These interest rates, these rates are unchanged. The bond market can't. I think the bond market knows what's got to happen, just can't find the heart to do what they got to do. The dollar today was down pretty big, down over a point on the index, still over 112 though. I mean, it's just, the dollar's strong. With rising interest rates, it's only going to get stronger. So it's going to put a lot of pressure on commodities, precious metals, debt-denominated securities, especially ones held by dollar-denominated debt securities held by foreign governments. That's really hurting them bad. Dollar down today. Metals, because of the dollar down, had an up day today, a small up day. Gold sitting at $1,649 per ounce, up $3.20 today. Silver at $18.72, up 32 cents. Metals holding their own. I think these values are fair right now because it seems like there's strong support around these numbers for gold and silver. Oil today down small, $85.44 per barrel for West Texas Intermediate, heading right back into that trading trough between 80 and 85 we observed for so long. So much for OPEC Plus, so much for raising freaking out about oil prices. Natural gas was really down today, though, dropping to $5.96 for their million BTUs, down over 7.5% today. This was at one time natural gas contracts up to $9.30 plus. Quite a come down for natural gas. I'm not sure if this is a trading anomaly. I'm not sure if they really believe that demand for natural gas is going to drop. I'm not really sure if they think that Putin's going to turn the natural gas on again. Weird markets, though. Tough to trade oil and natural gas right now. Be very, very cautious playing in those markets. Bitcoin today up over $200 at $19,522. Bitcoin basically holding support, kind of just laying there. I think Bitcoin's looking for a reason to rally or decline. I'm not sure which way, but it's looking for a reason. I'm not sure the catalyst that's going to make that happen for Bitcoin, so it's kind of just been lingering in that trading trough. Big week this week. As on Monday, like we always do, we'll give you an idea of what to expect as far as data and reports coming out this week. A very big week. Today we'll get the manufacturing index, some manufacturing data, the Empire Manufacturing Data Index. That'll be interesting because manufacturing has been holding up. I don't really know what much is left being manufactured in this country, but manufacturing has been holding up, so it'll be interesting to see that report and see if it continues to hold up. Tomorrow we'll have capacity utilization numbers, industrial production. We'll have a big earnings day tomorrow with Goldman Sachs, Johnson & Johnson, Lockheed, Netflix, all coming out with earnings tomorrow. These are all important bellwether stocks that kind of lead the way. Goldman, JP Morgan had their big earnings last week. Bank earnings looking very strong. I think Goldman's going to probably look pretty good unless they had trading issues. These reports, these corporate earnings reports are going to really help us get an idea of where the stock market's going to go, because we already know with the rates going up like they are, that the stock market has a lot of pressure. But if earnings start to slack or decline, that is really going to accelerate the stock market sell-off. So it's important to keep an eye on earnings, especially these bellwether companies like this. On Wednesday, a big real estate day on Wednesday, we'll get new building permits, we'll get housing starts, we'll get the mortgage bankers index, and we'll also get more earnings on Wednesday from Abbott Labs, from IBM, Netflix, Tesla. My glasses aren't on, so I can't read all of this super good, but a lot of earnings coming up this week. Thursday, existing home sales. We'll get initial jobless claims on Thursday, leading indicators, and the Philly Fed survey. More earnings. We'll have AT&T, Blackstone, Philip Morris, and Union Pacific, a big railroad. This is, I think Union Pacific is now Berkshire Company. But anyway, these earnings reports, interesting. Jobless claims will be the big one. Be interesting to see how jobless claims are going, because as we've made very, very clear to all you guys who view regularly, that the job market is what the Fed is pointing at as the big driver of inflation. They would like to see the unemployment number more toward 4.5 than 3.5. So these numbers are going to be important. On Friday, it's kind of a quiet day, but we'll get price earnings from American Express, from HCA Healthcare, a big one. We'll get Verizon and a whole bunch of other companies on Friday. These are the companies that you have to have a little bit of suspicion. Maybe these Friday reports, they try to get them out after the market closes on Friday to shield themselves from anything negative. So it's going to be a very busy week with data. We'll get a lot of signals toward what's going to happen. A lot of very, very negative press right now. It seems like the entire world now is lining up toward recession, toward all things bad, which kind of, I hate to say this, but this kind of makes the contrarian in me start to, the antennas start going up. I've always been taught in markets and investing that when the herd is all heading one way, it's typically toward the cliff, right? And I think that with this now universal negativity about inflation, about where rates are going, about the economy, about the strength of the consumer, and about everything really is very, very negative. As I've been apologizing for on the show, it seems like, because it's only negative news we've been able to pass along. The contrarian in me now is starting to look at this and think, is everybody right? I can't think of a time in history when that's ever worked out. So now I'm going to take myself under that and understanding and start looking at this with a little bit different perspective. Because I was writing writing this today for the show, everything's still negative. The data that we're getting, not all of it's negative. Earnings have been really good. A lot of this economic data has been good. It's funny how people react to it because everything bad is instantly believable, and anything that's any good economically or from the government or whatever is automatically suspect. That's an interesting phenomenon. And I guess, like everybody, can easily be caught up in that kind of thought too. I usually, though, the contrarian in me is going to stick the nose in before that I get to that point. So let's start looking at this a little bit differently. Maybe it's going to be tough, but maybe it's not going to be as bad as we think or as long as we think. Now, with that said, this next piece of information that I wanted to report on today is very interesting because Bank of America came out today with a report that said inflation and persistent inflation could last a decade or more here in the United States. They said, historically, it shows that it takes 10 years for a developed economy to return to 2% inflation or less once the 5% inflation threshold has been breached. And I've talked about this several times in the past on shows about how long it took them to get rid of the inflation in the 70s and 80s. That was more than a decade there. Interesting that they point to this. Now, the world is a little bit different place than it was in the 70s and into the early 80s. The idea that this kind of inflation that we're suffering with now could be here for a decade, that's kind of tough to wrap your mind around. At least it is for me. I think we all want to believe that this is a problem that we can get on top of and beat back. We understand now the mistakes that were made back in the 70s and 80s, where they kind of chickened out on getting rid of inflation with bad economic news and started to ease up on the monetary policy. We'll see now how it all plays out. It's going to be fascinating because personally, I would rather have a hard recession that lasts a year than have 10 years of persistent inflation and then ultimately that same bad recession for a year to get rid of it. Let's just get it over with, right? I don't know, at least that's the way I feel about it. But I thought that was interesting because it just kind of reinforces what I've been telling you guys, that once this inflation gets started at these levels, it is very, very, very difficult to get rid of it because it's very painful to get rid of it. As I've also explained a Brazilian times, interest rates going up is not what gets rid of inflation. Interest rates going up, especially where they're going to ultimately go, causes a recession, a bad recession typically, and that recession then lessens demand pretty substantially in a lot of cases, and then that is what brings the prices down and gets rid of the inflation. So we're looking at that, and there's our future. That is what will happen. Just a question now of when will that happen and how bad will the circumstances around that be? Could we tolerate a 10% unemployment rate right now? Could we tolerate a Fed funds rate at 8.5%? Those are the things that are likely going to have to happen or will likely happen before this inflation is gone. Maybe an inflation at 10%, although that just sounds like such a shocking number to me, but that is the number that Larry Summers himself has been saying. We've got ourselves into a pickle here. We've had a very, very easy money policy going back decades, 2, maybe even 3 if you get into the 90s and some of the shenanigans they had in the 90s. But for sure, since the dot-com bubble burst, we've had basically, the easiest monetary policy in the history of this country, the most expansionist, and then even more so from the time of Bernanke's bailout of the world in 2008-9. monetary policy basically has, rates have basically been zero this whole time. Crazy times are here, guys. The advice we've been giving you is very, very potent. Please take it to heart. Get yourself defensively, and if you have investments, stop looking for growth right this very minute and start to invest more defensively. Look for dividend-paying stocks, utilities, healthcare, food, soap, preferred stocks, stocks that are going to have value when earnings start to decline, right? If you can, do not add any additional debt onto yourself right now. Debt is going to become very expensive. Money is going to become very expensive. The idea now and the mentality will be when this is over, debt is bad. We've got into this cycle where leverage is a good thing. Well, the people that taught me my economics, the people that taught me about money in my life, were all anti-debt people, survivors of the Depression, saw what debt can do. So it's going to change. So if you can, don't add on any additional debt. And even better, if you can, pay down some of your additional debt. Pay down some debt if you can. Spend your money very sensibly. Be very thoughtful. Be careful of impulse stuff right now. Buy what you gotta buy. Stock up on some non-perishable stuff, canned goods, and stuff for your pantry, just in case there's some weirdness with food supplies. Load up some stuff. Nothing crazy, but just in case stuff, so your family's secure in the event there's some disruptions. These are very simple economic ideas. These are the ideas that work. Now, a lot of people are disappointed in the show because I really stick to pretty basic stuff like this. But I tell you this, guys, until you can handle very basic stuff like, watching out for debt and saving a portion of every paycheck and, spending your money conservatively, investing conservatively, being a thoughtful person with money, until you can master the simple stuff, why would you think you can master the complex stuff? You get an elementary education before you go on to higher education, right? Same in the world of finance. Same in the world of money. So master the stuff now, the baby steps, the little stuff. It's going to serve you well because this recession will come to an end. Good times will be back. Interest rates will start to come down. Monetary policy will get loosened up. These cycles. This is just going to be a weird one because with this inflation in here, if you're under 50 or 60, even 60 years of age, you've never seen anything like what we're dealing with today. Those of us who are a little more antique, so to speak, have dealt with this, lived through this once before, even though I was very young, I was old enough to know what it was meaning because I could hear my parents complaining about it nonstop. So times are going to be tough, but it's not the end of the world, guys. Prepare now, because when this is all over, everything you've ever wanted that you would buy today on impulse is going to be on sale. And if you need to finance it, money will be less expensive than it is today and is going to be over the next year or so. Anyway, that's it for today. Big week of data. We're looking forward to talking to you guys. As always, if you like what you're hearing, hit the like button. Share the video with your friends, your subscribers. Ask your questions in the comments. Please comment on the videos. If there's anything you'd like to see or hear me talk about, mention that in the comments. We'll be back again tomorrow with all kind of interesting data. Until we talk then, guys, take care. Thanks.